So a lot of people aren't familiar with these, but they've actually been in the tax code for a while. It's actually a conservation easement will yield you a charitable income tax deduction. So the concept is that Congress decided that it would be important to try to keep green space in America. And one of the ways that they've done that is by allowing these conservation easement tax deductions. So basically what it is that, if you take a parcel of land that's undeveloped and you then contribute that land to typically a land bank, which are established in most of the states, there's an easement placed on the land whereby you cannot develop the land. And the IRS basically says if you get an appraisal of the land, you look at what the value of the acquisition of the land was, and then what could it have been developed to if it had been turned into whatever, an apartment complex or oil and gas or whatever. And that spread between what the land was purchased for and what its highest and best use could be is actually an income tax deduction. It's deductible as a charitable income tax because you're basically putting an easement where the land cannot be developed. And some people say, well, I don't have a lot of land to contribute to something like that. There's actually a number of different investment groups that we can help you identify that actually do all of this. In other words, they buy the land in an LLC, they get valid appraisals and valid opinion letters from tax counsel, and then they look at the spread, and then they actually issue you the deduction for your portion of the LLC. And we usually see a minimum investment of maybe $40,000 to $50,000, but it's about 160% ROI. So in other words, if we have a client that puts $100,000 into a conservation easement by buying an interest in one of these investment groups, typically we're seeing a reduction in their income taxes of about $160,000 to $170,000. So they're getting that immediate return on the next year's tax return. There are some limits to it, like there are for all charitable income tax deductions. So under the Internal Revenue Code, there's different limits as a percentage of your adjusted gross income. So you have to, look at that. You can't just write off all of your income as an example. Much like the captives, it's very important that you only work with very qualified people because I guess like anything in life, unfortunately, they got some people out there that don't do things right. They're cutting corners. You got to make sure you got good appraisals, that the land's actually been contributed to a valid land bank. You got to make sure that you have the right opinion letters and all the structures are correct. It's really for accredited investors, but for a lot of people, it's really hard to beat when if you've got a $200,000 tax liability. This is a way to promote green space in America, and instead of paying the $200,000, if you can maybe pay $120,000, it's a pretty good savings for a lot of our clients. And if we can help you with this or any other kind of income tax planning, I have a master's degree in tax law, and I'd be happy to help you. A lot of CPAs aren't familiar with these kind of concepts. The good ones are. But we can work with your CPA to make sure that they're comfortable with the different strategies, whether they be captives. There's things, obviously the conservation easements we just talked about. There's so many different strategies out there that are all viable, legitimate strategies. We have clients that own buildings that do cost segregation, for example. So we can do all of this kind of stuff to help you, pay the minimum amount that you're required to the IRS every year.